Hello, everyone. I am Cori'Anna White, a junior honor student at Spelman College, and I would like to welcome you to a student's intro to alternative investments, where we have the opportunity to learn from current leaders in the alternative investment industry. Today, we're diving into the legislative and regulatory updates with John Grady. With 30-plus years of investment management experience, John serves as ABR Dynamic Funds Chief Operating Officer and General Counsel. The firm is a registered investment advisor, managing several mutual funds with UCITS sub-funds using proprietary volatility-driven strategies, as well as certain private funds. Prior to joining ABR Dynamic Funds, John was a partner at Practice LLP and DLA Piper LLP. Before that, he held various positions with industry-leading firms focused on managed futures, real estate, and other alternative assets and strategies. Prior to this, John received his JD from the University of Pennsylvania and BA from Colgate University. Welcome, John. It's a pleasure to speak with you.
Thank you very much. I'm pleased to be here.
Fantastic. And so now we're going to jump into our first question, and that is, as traditional investments like stocks and bonds are widely known, alternative investments often remain less understood. Yet, they offer unique opportunities and risk. For those unfamiliar with this category, could you explain exactly what alternative investments are and what distinguishes them from traditional assets?
You know, it's interesting because I was in a panel discussion recently, and someone in the audience asked us that same question. So it's not an idle question. It's not an unfamiliar question. I think we all use a working definition, which is an alternative asset or alternative investment is one that is not going to correlate to the public stock and bond markets. It might be because the assets are not traded, or it might be because the envelope, or we often will call the wrapper, is not traded, so that it's going to be delinked from a market price on a daily basis. So when folks are thinking about alternative investments, that's the essence of what they're talking about.
Thank you so much for providing us with that perspective. I think something else that's extremely important to consider is the higher returns that often accompany this sort of investment. And so may you expound upon why someone might consider investing in alternatives over more conventional options like stocks and bonds?
You know, I think that while higher returns are potentially available, the reasons to invest in alternatives include, in some ways, an equally important element, and that's the element of diversification, which comes about because the returns, whether higher or in some cases lower, are not correlated to the returns produced in the public markets. So someone who owns alternative investments will have, since the dampening effect on volatility of those investments and potentially the higher returns associated with some assets that can only be held as alternatives.
Fantastic. Thank you so much for providing us with that perspective. Something that I'm extremely curious to maybe hear your perspective on, especially given your tenure in the career, just in the alternative investment space, is maybe how students who are interested in pursuing this career can succeed. And so my question is, a career in alternative investments can be both rewarding and challenging, requiring a specific set of skills to navigate the complexity of the assets. What skills and qualifications do you believe are most valuable for someone looking to pursue a successful career in the field?
You know, I think that ultimately alternatives are a subset of investments that encompass everything from public market instruments all the way to pure private and sort of alternative assets in their own right. So that if you're going to start anywhere, you would start with a fascination for and a love of the markets and the way that investors are exposed to the markets through investments in securities, which typically translates into the pooling of investor money into a vehicle that acquires assets and allows the investors to share in the returns. If you're going to be focused on alternatives, it's a subset of those same investments that, as I said before, they're either alternative in their construction or they're alternative in their nature, meaning they might be an alternative asset such as real estate, which is obviously not a traded asset, or it might be a wrapper, which is not listed or traded on an exchange and therefore has an alternative return stream associated with that wrapper, even if it happens to own underlying instruments that are traded. So when someone is thinking about what would suit me as I'm looking at this space, well, I think you have to start with an interest in the markets. You have to start with an interest in the idea of pooling assets for returns, and then ask yourself, does what alternatives try to do hold interest for me. I think as you delve in, you discover that there's really quite a unique set of attributes that alternatives have, and that can be very attractive. But ultimately, it's the kind of the pulling together of a lot of threads. But ultimately, I think it's to an interest in the underlying sort of investment that is part of the alternative asset.
Now, you mentioned something really interesting is just pulling in all the threads into an underlying investment thesis. Now, I want to hear more about that from the legislative and regulatory update perspective. So my question is, the relationship between government policy and the financial markets has always been dynamic, with changes often reflecting broader economic or political shifts. Given the evolving priorities in Washington, particularly as new administrations and economic challenges arise, I'm curious to hear your perspective on this shift. How has Washington's legislative and regulatory agenda changed during your career, and what do you envision the future of it being?
I think that you have to go back to the 1930s for the last time that the legislative process dealt with securities and investments in a broad and thematic way. But the legislation that emerged from the Great Depression was disclosure for investments and regulation of certain market participants. So a lot of what's been changing is the attitude toward whether disclosure is sufficient or whether the ability of certain market participants to be operating in a fair and even-handed manner in the marketplace under current regulations. That's what people are having different thoughts as to whether or not that continues to be the case. So we haven't abandoned the disclosure approach to securities offerings. We haven't gotten rid of the regulation of broker-dealers or advisors. Mostly what we've been focused on is, are those things in place doing the job that Congress thought they should be doing? And if not, what's changed? And certainly the advent of electronic trading, the advent of just the information technology revolution that allows people to have a computer on their phone that's more powerful than some of the original supercomputers that were in use in the 80s. That impacts how people get information, use information, and of course how they access the markets. That's where a lot of the debate is now, is how should the markets be reacting to technology changes rather than changes in sort of whether we should have regulation or not.
I love that you addressed our ever-evolving technological landscape, and that's something that's really prevalent right now. We see the prevalence of artificial intelligence and so many other things. I'm curious to know, just in regards to alternative investors in general, why is it that people in this space should truly invest themselves in being more adept on the regulatory changes that are really occurring? And what are some of the potential consequences of either overregulation or underregulation in this space?
I think it's often helpful to focus on the fact that when Congress created the SEC, the Securities and Exchange Commission, it gave it at least two primary purposes that in some ways can conflict with one another. One is to foster the raising of capital so that business and the economy can grow, and the other is to protect investors. Depending on which party and which ideas are in the ascendancy, it's easier to see the primary driver be one or the other. I think the pendulum has swung somewhat from using capital as the primary driver of regulatory policy to one in which we're very focused on protecting investors. In part, I think it's because investors are now saving for their own retirement in a level that was unheard of when these laws were passed, and certainly unheard of in the 70s when a lot of the sort of when the pendulum first started swinging back to investor protection. So I think the regulators and the legislators are reacting to the perception that if people are managing their own finances for really important purposes, meaning their own livelihood, their own retirement, their own family wealth generation, if that's possible, then there needs to be protection in the system for those goals to be met. And what they don't want to do, though, is choke off the flow of capital while they're focused on protecting investors. It's that balance, and you see it in the Congress, you see it in the regulatory agencies, and you see it in the industry members. We're all trying to figure out sort of how to do both, because we don't want growth at the expense of investors reaching their goals, and at the same time, we don't want investors to be the only reason why we have investments. We have a marketplace to generate capital for economic growth. So it's a tricky, but I think a really important balancing act.
Good, and I love that you mentioned this very tricky but important balancing act. So my question would be, do you think this is one of the most difficult regulatory issues that legislators are currently facing right now? And if not this, then what?
I do think it is still the most important issue that they're wrestling with. It's not a clear line, it's not a direct line, but there is a sense that one of our political parties probably has investor protection more at the center of its ethos, and the other has more of a capital growth at the center of its approach to law and regulation. So as you have administrations change, as you have the majority party changing in either the House or the Senate or both, what you have is that competition between these two threads, between these two ideas, constantly being sort of reassessed, revisited, and in some ways resorted. You have bills that are started in the House to introduce greater capital raising, and yet you have those in the Senate who don't act on those bills because they don't think they necessarily meet the investor protection goals that they have. So while a lot of folks think that a divided Congress is the best outcome for a democracy because it stops the unchecked exercise of authority by one party or another, what it sometimes can do, however, is sort of poise everybody without any progress forward. We don't move forward with either the growth of capital raising or the investor protection agendas, and instead we sometimes kind of stick in the middle, at least on the legislative side, which has left a lot of room for the regulators to try and fill that space by acting on their parties. And I say the agencies are not partisan, but their chairmen or chairwomen or chairs are nominated by their party, who's in the White House. And so they're often thought to be an effective tool of policy for the party that holds the White House. So the agencies have become a centerpiece of that same balancing act between investor protection and capital growth, depending on who's in the White House and depending on who they put in the agencies and how willing those folks that they put in the agencies are to try and drive an agenda.
Beautiful. And you mentioned the role of agencies and of individual legislators. I'm curious to know, what do you think that individuals who are listening to this podcast right now, who are really empowered by what you're saying, what do you think are some ways that we as individuals, as citizens, can become involved in this act and ensure that there's that balance that you were referring to earlier?
I'd love to tell you that anybody can approach our legislative process individually and have an impact. I will tell you, with the amount of people who want to talk to legislators and to regulatory agencies, that participation in some kind of larger group, whether it's a trade association, a lobbying group, a political party, sometimes it can be a state-based interest group that is focused on a particular issue. Both of those processes take note of the size of the constituency that's talking to it. And while constituencies ultimately consist of individuals, and the individuals and their views are what's important, there is a certain sense that one of the best ways to achieve participation in our political system, and particularly in the legislative system, is to go and to meet your people, your congressmen, your congresswomen, your senators, and to represent a constituency that they can value and understand sort of where it fits into the broader body politic.
Beautiful. And so to switch gears and talk about a little bit of your upbringing and how you really got involved in the current space. As I review your impressive career, I see that you've served in several high-level executive positions, including role as the chief legal officer and also partner at many of the firms that you've worked with. Given the complexity and demands of these roles, what do you believe are the key attributes that contributed to your success? Additionally, what inspired you to pursue a career in the alternative investment space, especially asset management law? And do you ever envision your life unfolding in this way when you reflect on your life as a child?
I don't know that I could quite see myself as an asset management executive when I was a child, but it wouldn't have been out of reach. I always had an interest in the markets and in investing. That was the household I grew up in, not from a trading standpoint, but from the idea that the growth of capital through the expansion of corporate enterprises and the success of certain corporate initiatives was just something I understood. Just by growing up when I grew up and reading what I read, and I did read widely at the time and studied history and economics in college, I decided I wanted the tools of a lawyer to put to work in whatever I was going to do. So I went to law school not knowing whether or how I wanted to practice law, but I did go to get the education that a lawyer gets from the curriculum and from the whole experience. And then I found myself gravitating back to sort of investment issues. And I said to myself, I think I really want to be in the asset space, but as a lawyer, let's see where that takes me. And it's interesting because at a certain point, it took me from a lawyer to an executive because I began to appreciate the way in which my skills allowed me to participate, not just in implementing a decision by drafting a document, but by sitting in the decision-making body that was coming up with whatever it was that was going to be the path forward or the strategy chosen or the product built. And that's where I've lived between my law firm roles and my corporate roles, is in the space where decisions are being made. That's where I love being. That's where I think I bring my legal skills, but also my love of the markets. Alternative investments, to get to the final point of your question, they are not separate from the markets. They are a subset of the broader concept of investing and of markets generally. And so for me, what attracted me was the way that alternatives offer a different approach to results that are not correlated, as opposed to just loving the market and what it yields for people. The idea that we would build products that did not do the same thing that everything else did really appealed to me, and that's why I think I came all the way to this part of the space.
Well, I just truly find that very inspiring, especially for those who aspire to create change. And like you said, you want it to be in that center and have that knowledge. And so it's amazing seeing the feats that you've truly accomplished. And I'm so excited to see where you're going. And I think that kind of segues into my last question. And that is, what would you consider your greatest accomplishment? And what kind of legacy do you hope to leave behind?
I think accomplishments are often milestones that you don't even know you've reached them at the moment you've reached them. And sometimes it's being part of an organization that does something over a period of years that is ultimately the accomplishment that you can look back on and say, I'm glad I poured my energies, not for one specific aim, but for the betterment of what that group, or the achievement of what that group is seeking to do. So I think among the things I'm really proud of are my association with ADISA, as a board member, as a legislative and regulatory committee co-chair, as a participant in our conferences, as a member of our lobbying brigade when we go to Congress or we go to the agencies to speak on behalf of our members. So I think for me, the accomplishment has been the translation of skills that have been a lifetime in building into then the delivery of something that effectively represents and moves forward the goals of our association. Because I do believe in them, and I believe that in moving them forward, I'm achieving my own personal goals as well as those of the association.
I love that, and I can definitely attest to that being the case. And so with that being said, thank you so much, ladies and gentlemen, for tuning into today's session. We are so glad that you joined us for this insightful conversation on legislative and regulatory updates with John Grady. If you've enjoyed this session, please subscribe to our channel. We'll be back soon with more expert insights and student perspectives on alternative investments.